Hello and welcome to Dollars and Cents, the Australian Institute podcast where we're talking about just what the hell is going on in the economy. I'm Eleanor Johnston-Leake, the senior content producer here at the Australian Institute, and as always, I'm talking to our chief economist, Greg Jericho. Hello, Greg.
Hi, Eleanor.
How are we today?
I'm very good. Good to be back.
Good to have you back. So, Greg, I have been hearing that banks have been doing it tough.
Yeah, poor banks.
What's going on with the banks?
Oh, the poor banks.
Poor banks isn't something I'd be thinking I'd be hearing from you.
Yeah, we really should light a candle for all the banks and
pour one out.
Pour one out. Organise a telethon to raise some money. Yeah, the word that's come around this week, and especially from perhaps more bank-friendly media outlets, is that banks haven't been making as much money over the past couple of years that they would have liked from higher interest rates, because high interest rates normally mean banks do really well, and the poor banks haven't done as well as they wanted to.
Have they've done terribly or just haven't done quite as well?
Oh, no, the banks are still doing very well. They're just not making stonks of money. Basically, it comes down to one big thing, and that is that Australians, and this is something that the former head of the Reserve Bank, Philip Lowe, was even saying.
So if you don't like the fact that banks are earning so much money, then I encourage you to shop around and make them work harder for your money. And some will pay you more than 5%.
He really started telling people, even in Senate estimates hearings, to ring up your bank and say, actually, I'd like a better deal. And if you can't give me a better deal, I might go somewhere else. Because one of the key things about banks and profits is that they hope we're all gormless idiots who just take our interest rates and our loans and have it for 30 years and don't bother them for 30 years. Just keep paying and don't annoy them. And what he was, Philip Lowe was essentially saying, and I actually wrote a couple articles about this because I kind of did it myself, was you rang up your bank and all you had to do was, if they didn't offer you anything, say, oh, well, I think I might go elsewhere. And then, oh, wait on, we can find an extra 0.5 percentage point or 1 percentage point less.
Did that work out for you?
Yeah. I saved a heck of a lot of money. And this was back in 2019. And I did it again sort of once interest rates started going up.
Nice.
And this is what has happened since interest rates have started going up. And because they went up so quickly, Australians have become a lot more confident and a lot better generally at just ringing up and saying, I want a better deal, or going through a mortgage broker and they go and look for better deals. And because the actual costs of changing your loan now are not anywhere near like they used to be. There used to be a lot of exit fees and things like this, which were in a sense locking you into your account. They've essentially gone. And it means that people are now shopping around and going, oh, I just got a note that my bank is raising interest rates by 1%. Well, bugger that. I'll see if I can get a better deal. And because of that, because Australians have actually been acting like consumers, acting like customers like we would in any other shop, we could go and go, oh, the price of this good is cheaper in the other shop. I'm going there. And banks have realised that with home loans, because basically the price of your home loan is the interest rate. That's basically what it is. And banks have had to realise, we got to keep offering better deals to keep our customers. So what we've seen is the real increase there's obviously been an increase in interest rates for everybody, but the real increase in interest rates has been for new loans. And they have gone up a lot more than the average of everyone who's already got a loan. They've been better at sort of shopping around or being offered a lower rate. You put that together and banks are like, we thought we were going to be able to charge a lot more.
So a bit of healthy competition, not something the banks are really that used to, it seems.
Yeah, bizarrely, we actually have some competition in the banking sector, which we have really not had much of for a long time. Australia's banking system basically has 4 big banks. They control around 80% of the home loan market, a bit more of that of the deposits. They just dominate, and they were able to get very fat and profitable from assuming that people are like, oh, well, I've only got a choice between the 4. We can not compete too hard. with each other. We can do things like, we won't compete too hard on the interest rates, but we'll compete hard on things like, we'll offer, if you take out a loan with us, we'll offer you a bonus saver account, or we'll give you a credit card that has reward points to it. Or a little bit like with supermarkets, Coles and Woolies, we won't compete on price, but we'll give you all those knickknacks.
Give you like the little collectibles that you can throw in the trash.
And what's happened in the past couple of years is the banks are like, we actually have to compete on price.
Yeah.
And
womp womp.
Yeah. And the reason why this has all come to a head, though, is because we know that interest rates are very, very unlikely to go up now, and they're probably going to start going down. And what has happened is that 3 of the banks, notably Commonwealth, ANZ, and National Australia Bank, have all gone, let's not wait for the Reserve Bank to cut rates. Let's cut rates already. But they're not cutting rates on home loans. They're cutting rates on term deposits.
And for the financially illiterate among us, like myself, what is a term deposit?
A term deposit is something where, let's say you got a chunk of money and you don't need it for a while. Like it's not in your savings account that, I need this so I can buy my shopping. It's like, okay, I've got $10,000. I want to just invest that somewhere.
Yeah. Now maybe buy a house later.
Yeah, exactly.
Maybe.
You could put it in buy shares, but they're risky because maybe the price will go up, maybe the share price will go down, who knows. But what banks offer is these things called term deposits, where for set periods of time, and it could be a 1-month term deposit, 3 months, 6 months, 1 year, 3-year term deposit, where in a sense you give them the money, they will pay you an interest rate on that money, but you can't get that money for the period of that term deposit. That's why they call it a term deposit. So obviously the longer the term, so if it's 1 year, you're going to be offered a higher interest rate than it is for, say, 1 month, because 1 month, you know, there's no real benefit from the bank.
Yeah.
You know, it's just like a savings deposit. The reason why this is important is because, one, term deposits are very crucial for retirees, people with superannuation. They put a lot of money in term deposits because it's a good way of getting very safe returns on your money. And also for the banks, it makes up a massive amount of their funds. That's where they get around 50 to 60% of their funds that they can then use to loan out to us to buy houses and things they get from term deposits.
Wow, that's quite high.
It is, and it used to be a lot lower before the GFC. It used to be much lower because they were getting a lot of their funds from short-term deposits and loans from overseas. The real sort of, you know, before and around the GFC, for those of you who can remember, which is now going back a few years, there was a lot of this sort of cheap money.
Yeah.
Where you were able to borrow, get really cheap returns. It was great for banks because they weren't having to pay high term deposits to encourage people to put their money in banks, and so they were able to get this cheap money from overseas. The GFC killed that because the cheap money was reliant on a lot of those dodgy bonds in the US on the housing that, if you've watched The Big Short or Margin Call, was all based on crap.
Yeah.
Basically, it all went to hell. And so that all kind of disappeared. And so the banks were like, well, we still got a lot of people who want loans. We got to get money from somewhere. Now they get it from more of it from term deposits. And so what that means is, to encourage people to put money or deposit money with you rather than with the other bank, you have to pay a higher interest rate. And so in a sense, this produced a bit more competition on term deposits. And so what we have seen, and over the past couple of years, interest rates have gone up. So they've gone up for loans, but they've also gone up for term deposits because they want people to invest money with them, put money in our bank so that we can then invest it at a higher rate to get a return on it and so forth. But that's a cost to the bank. So your home loan, that is you giving interest money to the bank.
Yep.
Term deposits are them paying interest money to people.
Are term deposit rates linked to interest rates that are set by the RBA?
Yeah. It's all kind of linked, but it's It's not super linked in the sense that it's always going to go up or down exactly the same amount. In fact, the gap between things like home loans and the cash rate has become a lot bigger than it was, say, 15 years ago. And that's because when the Reserve Bank was dropping interest rates back between 2010 and 2020, banks weren't dropping their home loans by as much as the cash rate was going up. And they were lowering their term deposits by the same amount or maybe a bit more. Over the past couple of years, what we've seen is that mortgage rates, the interest rate on mortgages has gone up by a bit more than the interest rates for term deposits have gone up. And why would that be? Because banks want to get more money than they have to pay out.
Yeah.
And so what the whole upshot is that now with them going to reduce term deposits, and some of the term deposits that the ANZ have reduced them by, 0.8%, so nearly a 1% drop. And it's like, well, they're not dropping the home loan rates. So what this essentially is meaning is they are keeping the amount of money that we're having to pay them the same, and they're reducing the amount of money that they're having to pay us.
But poor banks.
But poor banks. And they're saying, we have to do this because our profits haven't gone up.
Our profits aren't quite as ridiculous as they otherwise
because you guys have all been actually ringing around trying to get a better deal. We haven't made as much money as we thought. And because the Reserve Bank has gone to lower rates, and that means we're going to have to lower our mortgages again.
Yep.
We better get in first and lower our term deposit rates to make sure that we're
making stonks in capital letters rather than stonks in lowercase letters.
It really is. I mean, I've seen lines in the Financial Review talking about the bank's profit margins haven't been doing well. The great thing is we've got the Australian Prudential Regulatory Authority, or APRA as everyone knows it, which every month puts out banking statistics, and every quarter, every 3 months, puts out more banking statistics that actually give us information on how much interest they're paying, how much interest they're getting, what their profit margins are, and their profit margins are doing fine.
Yeah.
Like they're stronger now than they were before the pandemic. They're about as strong as they were just before the GFC. And remember, Australian banks are among the most profitable banks in the world. They have historically made higher profit margins than in the US because there's only 4 of them.
Yeah.
It's an oligopoly. They have got us, and people are very loyal to their banks. And this is why, there's Dolomites and things like that.
I was going to say, I remember I had a Dolomites account and I stuck with CommBank for ages. And then I was like, hang on a second.
Yeah.
Why am I with them?
Look, a lot of people will do that.
Yeah.
They'll just stay with their bank, and a lot of time, the first time they'll think about changing the bank is actually when they take out a big loan or something.
Yeah.
Because then they're like, I'm taking it home. I will actually look around. And if you're with Commonwealth, you go to Westpac and they'll say, you're with Commonwealth, come over to us and we'll first offer you we'll put you in a bonus saver thing as well and all that. And pretty much once you're with that bank, it's very tempting they try and make it, let's have offsets accounts and things. So basically everything you do is with them, and you've got home insurance, and it's and you become. I mean, let's be honest, it's a bit of a chore to go through it.
It is. It's a lot of paperwork to fill out.
Yeah,
a lot of time,
and so Australian banks very good at keeping hold of your business, and trying to convince you not to look over the fence. And it's a case of Australian banks have done very well, and let's think about what they were actually offering. A loan is what we call a highly substitutable good, because a loan is a loan is a loan is a loan.
Yeah.
A loan is just someone giving you money so that you can buy something and you promising to repay it.
It's not like someone else giving you the same deal, but it's not they'll give you a smile. Doesn't make much difference.
Exactly. It's not like a restaurant where they're both offering steak and it's like, but there's good steak, well cooked, good cuts of meat, and oh god, you look like that that fell on the kitchen floor and you've just
it
cooked
might
the
have.
hell out. Basically, all you're worrying about with the loan is that the bank is going to not bring around armed guards to get the money out of you.
Yeah.
You know? They could afford it. They're not going to go broke. They really should be just competing on price, and there's not a lot of differentiation of it. And when you've got something like that, why should they be making huge profits out of you? And we're not saying we want banks to not be profitable. Profitable banks are good because that means we all can feel secure about going for loans, putting our money in there. We're not thinking on, we don't want runs on the bank or anything like that. That's the last thing we want. That doesn't mean they should be making super profits. And also, if they are making super profits, we should tax them as though they're super profits,
Amen.
Just the same as if they were gas or iron ore or whatever.
Yeah.
But there is this common line in coverage of banks. Oh, no, we need them to be strong and profitable. It's like, yes, but that doesn't mean we need them to be the most profitable banks in the world. And if they are, there's a reason why they are, and it's often because how do they make profits? Generally, let's be blunt, screwing over the consumers. It's not because, they're really savvy investors and they've just worked out how to get better returns from the market. No, they're charging huge fees.
There's not much competition.
There's not much competition. They're able to get away with a good difference between what they're paying us in interest rates, between what we're paying them. That's why we had a Royal Commission into the banks.
How many financial scandals does it take? How many ASIC investigations does it take? How many tens of thousands of people being ripped off does it take?
They pull the rug from under your feet after they have gained all that money from you and transferred everything in your trust.
Those institutions are the bedrock of the economy. There'd be very few Australians who are not a customer or a shareholder of the banks. Many of us are both.
I think to make banks stronger and better in the future, the transparency of a Royal Commission will enhance the conduct in our banking sector. It won't diminish it.
The Coalition, of course, fought tooth and nail against this Royal Commission, blocking it 26 times. What was the rationale behind resisting it?
Well, Georgie, look, we could debate the failure of the Labor government when they were last in power and they had a number of financial scandals on their watch and they did nothing. We called the Banking Royal Commission and yesterday we announced that we'd be taking action on all 76 recommendations. I want to look to...
Yeah, let's talk a bit more about that. What was the Royal Commission about?
There was a couple of things. It was to do with financial companies, but it was also to do with banks and the fact that they were really doing well out of the fact that we weren't curious. The fact that we weren't really paying attention because they were going out of their way to make sure we didn't pay attention to the fees that they were charging, the commissions that they were putting in, the added extras in insurance sort of things or in superannuation where it's like, I'm paying for insurance on my superannuation or a fee on my superannuation. I'm not even looking at it, so I don't know.
Yeah.
They were charging people who were dead. It was just a horror show.
Why do you think people aren't curious about that sort of thing?
Well, because banks, they work hard to make it complex. So you go, oh my God, this is just too much.
Yeah.
I don't know.
Too many numbers.
This is the whole point of this program is that economics is generally boring for most people. It's confusing most people. We're trying to make it understandable. And banks know that as well. Banks know that there is a lot in their favor of making things complex, making them a whole lot of sludge to go through when you're reading things, and being able to use fancy terms that you go, okay, I don't know if that is, what does that mean? Hiding fees and things like this, because it goes back to us sort of being content with our home loan and not thinking to ring up and say, hey, actually, I'd like a better deal or I'm going next door.
I guess a lot of people wouldn't even know that that's something you can do.
Yeah, especially with things like superannuation, where in the past, it's getting better, but even still, many people, and I was one of these, had multiple super accounts because you had a number of jobs and you got a new super fund with each one. And so it's not even a case of you were having to look at your superannuation. It was you were having to remember, do I have any money in that superannuation account from that job I did for 3 years, 15 years ago? And it's like, and the banks, and a lot of the banks were in charge of these funds, were like, yeah, you don't know how much you've got in there. so I'm going to put in some fees and things like that. And it's quite interesting. And I sort of was having a look at these APRA figures, and they actually have how much banks earn from fees and commissions. And I thought, oh, I'll just have a look at that to see if they're going well. When you notice that around 2017, the amount of fees and commissions that banks were charging just absolutely falls off a cliff. And of course, that was when the Royal Commission handed down its findings. And it's like, oh, maybe correlation does not equal causation, but with this one, I'm thinking, yeah, it was basically the Royal Commission bailed the cat on this and had so many people giving evidence and was able to find the fact that these banks were just treating us like mugs and conning us in a sense. And this is why, whenever I hear people say, oh, Australians love bank bashing and it's not good, banks are fine, I'm like, nah, bash away.
Yeah. It's good to see some real world consequences of a Royal Commission.
It is. I mean, one of the reasons why as well is that both political parties know that everyone hates banks.
Yeah.
So there's generally not a lot of political favour from being seen to help out banks.
Yeah.
But that Royal Commission was quite astonishing. I mean, we kind of had been lied about. There were some very sad and horrific tales of just how poorly people were being treated. And you think about, this goes back to the whole thing of, why don't we look into these things? One, it's complex. They're trying to make it complex. Who are they really targeting? Not someone who, like me, who's got an economics degree, and I still find the damn things annoying and generally try to get my wife to go, can you ring up the bank? She's like, no, you're an economist, you ring up. But I don't want to. But you think about low-educated older people, basically the people who are likely to get an email and actually think, yeah, I will donate some money to this poor Nigerian prince or something.
Yeah.
These are people who are easy marks for companies because they trust their bank. They grew up thinking, oh, well, my bank's I've always had my money with my bank. They haven't gone bust or anything. And it's like, yeah, but they've been chiseling away each month with things. It just reinforces and that there's not a lot of competition in the banking sector. Yes, they've been competing over mortgage rates, but it seems very curious that they've all, at least three of them, Westpac hasn't done it yet, but all three of them in the same week have decided, you know what, now's a good time to drop interest rates on term deposits. And it's like, well, the Reserve Bank's holding rates steady. Why are you guys all doing this? And if it was a really good competitive environment, if one did it, the others would be like, cool, we can get their business now.
Yeah.
And instead, they've all gone, actually, yeah, good.
You know what? Now we can do that.
It's a bit like if you had, there were 4 big supermarkets and one decided to raise the price of milk and the others going, instead of going, what, we're going to get all your milk business going, actually, you know what? Good idea. Let's raise the price of our milk as well.
What a crazy concept. I wonder if that's ever happened.
So I know the ACCC will be having a bit of a look at this and going, this doesn't seem very competitive. And this is all. I'm not suggesting they're doing anything illegal. And this is the whole problem with a lot of Australian industries. And we've talked about this with supermarkets. They don't have to do anything illegal.
Yeah.
There's no competitive pressures for them to collude and drive out someone else. It's just they all know, oh, yours, especially Commonwealth Bank, is the biggest bank. They move, we'll all follow. There's not a lot of gain in them trying to undercut each other. And so they kind of don't. They just act in each other's best interests. And then every now and then they will go through the motions of, oh, interest rates have gone up 300 basis points in a year. This is absurd, but we will try and people were just ringing around trying to get better deals. Okay, we'll take advantage of that. But can we please go back to the time when people didn't care about their home loans, didn't ring us up trying to get a better deal? And on term deposits, we're not even going to entertain that. And that's why I think this is a pretty dodgy thing that we've seen, especially when, as I say, bank profits are doing great. Maybe they haven't grown as much as they'd like, they're still doing incredibly well.
So don't listen to them crying poor.
No, and as I say, if you do have a home loan, shop around. If you're looking to do a term deposit, don't just roll it over and go, oh, I've had it in this bank for 12 months. Let's just do another 12. No, take your money out and go, I'm going to shop around.
Yep.
Because that's what we really need, aside from actually better sort of a prices commission that is able actually to look at what supermarkets, what banks are doing with their prices. And I say interest rates are the bank's prices. Unless we get in an actual organisation like that, it all comes down to us being very unloyal to our banks and realising they don't deserve our loyalty. They are giving us a service, and if it's not good enough and they are not offering us a good enough price for that service, go elsewhere.
And full permission to continue hating banks in general.
Absolutely. I mean, as I say, Australian pastime, get on it.
Yeah, it's patriotic.
It is.
Well, I reckon that's probably all we've got time for today, Greg. Thanks so much.
Enough bank bashing.
Well,
for today.
For today.
We will be back next week with another Dollars and Cents. So thank you all for listening. This episode of Dollars and Cents was recorded on Thursday, the 22nd of August, and some things may have changed, but probably not your desire to bash the banks. So keep at it. You can find my column, which has all the figures from APRA on just how well the banks are doing, my column Grogonomics on the Guardian Australia site. And for more research on things like the profitability of banks and how interest rates have affected the economy, go to our website, which is at australiainstitute.org.au. My Twitter handle and the handle I use are all social media like Threads and Blue Sky and all the others is at GrogsGamut. And Eleanor is
at Eleanor J_L, Eleanor spelled ELINOR.
Thank you all for listening. Remember, you can leave comments either on any of those social media pages or please email us at our podcast email, podcasts@australiainstitute.org.au. It'd be really great to have a whole bunch of questions so we can do a bit of a special Q&A podcast soon. Other than that, our theme music is from Blue Dot Sessions. Have a great week, and we'll see you all next week.
See you next week.